I've got a crazy one for you guys today as we cover PMI numbers, the markets, gold, the dollar, and more. Let's jump in. Today was absolutely action-packed with PMI numbers reporting from Europe, the UK, and the US at the time of recording. We are just moments off of this PMI number that we got in the US, all of which caused serious momentum and stirs in the market as economic strength came in more than expected for the US and also caused some stir on the euro and the pound. Now, a quick highlight view, what we saw is some better than expected numbers in some cases for Europe and the UK, but then a very impressive, also Germany, of course, as well, German and French specifically. But then notably, we had really strong economic numbers in the form of PMI numbers. If you don't know what PMI is, by the way, guys, here is sort of a high level view of it. It's a leading indicator of economic health because it's basically businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insights into the company's view of the economy. Now, of course, if you were a business and you, let's say you manufactured a product and you reported that, hiring was up, spending was up, things are looking good, it's because it's a very insightful thing because you as a manager for a manufacturing company would have a lot of insight on what your company is seeing in terms of economic activity. You've got your sales numbers, you've got your expenses, and you can gauge that. So it's an important indicator. PMI is overlooked by many traders out there. I want to talk just briefly about the euro here, what we saw this morning, a chaotic start to everything. You can see a really jolting move here to the upside initially. When we got Europe, we had German and French numbers come out showing some better than expected numbers in terms of, I believe it was services that did better. Yes, services beat by a good bit with PMI numbers for manufacturing coming out about as expected. In terms of a fundamental catalyst, this was a nice start to the day for the euro, which came up and retested yet again our level of resistance that we've been talking about here on the channel for a while. Price has been very resilient to hold this level and continued to do so up until when we had US numbers. US numbers came out this morning and caused this to erase all of those gains on the initial release as US PMI numbers came out even hotter than expected, showing a very strong, stronger than expected economy. Now, we are seeing some shrinks in the economy, but signs of life, signs of strength there can be very dollar bullish. And we saw the dollar jump on this news because, again, a stronger than expected economy or economic figures coming out may prompt the Federal Reserve to remain hawkish to squash very stubborn inflation levels. And I want to show you guys this. If we take a look, there's still a big positioning in terms of smart money on the dollar long side of things, right? You can see that if we take a look at the COT data, as of the most recent reporting, the US dollar still has a very heavy presence in terms of institutional positioning, but so does gold, which took a nosedive this morning off of this number. And I want to just come back to that in just a second. We have inflation data I want to show you guys here. If we isolate inflation for the US, which of course is an important market to track, what we can see is inflation is on the decline, but signs of economic strength could cause this to stall out or perhaps in the worst case start to rise again. And so market participants, especially of course the Federal Reserve, are watching economic numbers like today very closely. So when we have strong economic numbers coming out, it's causing some dollar strength because of the potential for the Federal Reserve to stay hawkish longer. So we had a big pop to the upside. Is this sort of completely dollar bullish? Well, the dollar seems to be in sort of limbo right now, jumping back and forth between our highs around 102.2 and our lows around 101.7. I would say watch for a break either ways, right? If we continue to see economic numbers that come out strong, it's very possible we could break out with some conviction to the upside, as we attempted to do here earlier today. Now we've got to talk about gold, which fell apart on this initial release. You can see, again, this would make sense in terms of if you guys are fundamentalists like myself here on the channel. We talk fundamentals a lot because they are very powerful in terms of looking at forward projecting for the markets. Well, the gold market sold off like crazy amidst both the European numbers that we got, as well as the US numbers. Why? Because it showed economic strength. Economic strength, as if you use the EdgeFinder, you can take a look at this. If we go to the gold specific chart, pull this up, forecast for gold, if economic numbers are looking good, it's usually a bearish thing for the gold market. And we can see that in the form of, for example, one of the biggest metrics, GDP growth. If GDP growth is increasing, we tend to see a declining gold market. Why is this? Well, remember, when people are fearful, what do? They buy gold. Well, if the economy is strong, and we saw that in both two major economies, the European area as well as the US, it puts driving force to the downside on gold as that fear is sort of squashed out of the picture. So right now, I think we have some headwind for gold, and I'm not necessarily looking to buy it. I mentioned earlier this week that a break of this level around 2010 would trigger me to potentially get long, but with this new data pushing gold off of those highs and showing resilience, I'm not necessarily bearish, but I'm waiting to see signs of life before trying to get bullish myself. I'd like to see a break of that 2010 mark still as a key spot on the chart for me. I'm still long S&P 500. Here is my trade. I'll show you guys this. This is my actual account, where I am long the S&P 500, basically at break even at the time of recording this, with a choppy start to my trade. I shared this inside of our Discord channel, which if you're not already inside of our Discord channel, I share all of my trades there. If you guys want to see the trade alerts that I am taking, and more importantly, why I'm taking them, you can access our Discord channel using the link down below in the description. But real quick, what I'm going to do is, for today only, this is a very limited time thing that we're going to do. We're going to be offering check out the Discord for free day. That's a long name for this, but basically what I'm going to do is we're going to have a link in the top of the description. Click this link and click start chat. And this is going to take you to a conversation with one of my staff members here in the office. If you want to check out the group, click VIP Trading Signals and send them free trial. And you'll get 1 day just today to check out the Discord and see if this would be something that you're interested in getting. We're doing a major sale on it, so I want you to come try it out, come check it out for the day, tour the group, see what it's like, and hopefully we'll have more members join us. We're looking for more serious traders to come join the community. We're always open to more serious ones joining us. We're not looking for people who are just looking for get rich quick stuff. If you're here putting in the work like we are and you're looking for other traders to collaborate with, take us up on that free trial offer, click that link and chat with one of our team members right away, and you'll be able to get into the Discord while we are in the office here in the office. So anyways, continuing on, I am still bullish in the S&P. Why? Economic numbers are strong. Doesn't that push the Federal Reserve to be more hawkish and more, crucial against the, sorry, my phone is ringing. Somebody's calling me. I'm not sure who it is. We'll just come back to that later. I'm doing a video. Again, the S&P staying strong, economic numbers staying strong. I think that, and I'll give you guys my hot take on this. When it comes to recession fears are everywhere on Wall Street, and market participants are thinking, recession is coming, earnings are going to get slammed, and indices are going to just collapse. And while that could be the case, we continue to see very, very resilient economic numbers holding up. Now, of course, the economy is slowing. There's pretty much no question about that. Job growth slowing, that sort of thing. But I think that there is some hope, in my opinion, for a possible soft landing where earnings don't completely collapse. We've seen mixed earnings so far. Tesla performing very poorly on earnings and that sort of thing. But despite that, I think that there's a possible room, and the market is not expecting, it's sort of expecting recession, right? So if there's that unexpected potential that, hey, economic numbers stay okay and things look okay, we could see upside. So my opinion when I look at the S&P 500 is I'm buying pullbacks until I'm proven wrong. Now, in terms of proven wrong, I do have a stop loss on my trade. If markets break through structure here today, I will be out of my S&P 500 trade. Basically below the lows of this market structure. So if price breaks underneath, we'll be out of that trade. I'll continue to see if I can trail a stop and let this thing run if it wants to. And again, we have earnings season upon us, so volatility is very high. And as major corporations, especially once we get into like Apple and Amazon, the big ones start to report, the indices will have lots of volatility there. So again, gold traders, S&P traders, and dollar traders, lots of news here in the markets. Again, today's economics economic numbers were strong for the dollar, but again, I'm not necessarily bullish on the dollar. In some cases, I would say yes, you may have inflation, but job growth seems to be slowing as expected, and that could leave room, like I said, for a potential soft landing, in which case dollar would not be my favorite pick. I'd much rather be long on things like the S&P. So there you go. That's my take on it, guys. Remember, do not miss out on that free trial today. Click that link. It'll take you to a live chat feature where you can chat with one of our team members and get into the Discord channel today for free. This is not something we usually do, so don't miss this opportunity to do it. Click that link, chat with us, and maybe I'll see you in the Discord. Thanks for tuning in. Catch you later. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.